I'm Zarina Dimitrova, a strategic partner and mentor to businesses in the process of transformation. Join me on Grow and Learn as we explore a range of topics from personal development and career advancement to relationship building and financial management. With practical advice, inspiring stories, and expert interviews, we'll give you the tools you need to thrive in every aspect of your life. Join us as we share insights and strategies that can help you achieve your personal and professional growth objectives. Welcome to Grow and Learn, everyone. This is Zarina. I am welcoming somebody who's going to help your financial future, financial planning, if you decide to listen, or at least it's a very interesting concept and outlook on how things could work in an alternative financial model. I'm welcoming Jim Lee. Jim has invested in more than 600 units, condos, real estate units in the past 2 years, which is really impressive. I really want to know how this happens. I mean, you graduated, you did your bachelor's in 2010, and suddenly you're there. How did you manage to turn around your faith in such a way?
Absolutely. So first of all, thanks for having me on the show, Zarina. It's my pleasure to be here. And like you said, I graduated from UCLA back in 2010, which is right after the subprime mortgage crash, 2008, and the European debt crisis in 2010. So it was very difficult to find a job. Took me about a year to go through a bunch of interviews and got really good at selling myself. And I ended up working at gave me an opportunity to work as an inside sales at CoStar LoopNet. Now, so for those that don't know what LoopNet is, it's basically Zillow for commercial real estate. And from there, it kind of just helped me learn the importance of having multiple stream of income, because I was able to speak to real estate investors, agents, lenders, property managers on a daily basis. And so after working there for a couple of years, saved up some money, that's when I decided to acquire my own real estate and have that nice an additional stream of income. And ever since I acquired that 2-bedroom, 1-bathroom condo, my first deal, I never looked back. And from there, I kind of transitioned from a W-2 employee to become an entrepreneur. I got my real estate license, did that for 2 years, and eventually I transitioned from being a realtor to a syndicator.
Tell us what a syndicator is. I'm acquainted about syndication when it comes to startup projects, but how does it work in real estate?
So in syndication, it's basically a partnership between investors who pool their resources together to buy a single investment. This allows you to invest in multi-million-dollar properties such as multifamily, and that's the asset class which I'm in. But you can also syndicate other commercial buildings or development projects. Syndication eliminates much of that risk while sharing the upside. The property generates an income, and that just gets split amongst all the investors. So it's a win-win situation for both the operator and the investors.
Are there designated platforms for real estate syndication, or do you use a proprietary platform, or what do you use to get people on board?
So most people, they build their own brand, they build their own website, like I have. But then there are platforms out there like crowdfunding. I'm pretty sure you've heard of it. That they raise capital and then they use that capital to buy commercial real estate.
Mm-hmm. And what is your platform called?
My website is called formosainvesting.com. Mm-hmm. And on there, I also wrote a short 20-page ebook that I basically just help educate my investors. It's basically just talks about all the mistakes I've learned over the years, and to give that content to my investors so they don't make the same mistake I make.
Yeah, I am jumping you right in, Jim. I want to know numbers. I want to know why this works and how can people, if they want to participate in this, because there's so much to talk about right now. In real estate, there are not so bright expectations. We are on the verge of a collapse. Some say worse than the Great Depression. We don't know what's going to go on. But let's talk about the current situation. Give us some numbers of how things have been working for you up to this moment, and then we can develop it to the future.
Yeah, absolutely. So the numbers that we work with in syndication is, typically minimum investment is between 50,000 to 100,000 into a deal, right? And so once your money is invested into a deal, your money is stuck there for 5 years. And the reason why is because in our business plan, we project to hold this commercial building for 5 years. Why? Because over time, appreciation is going to, increase, the value of the property. But on top of that, we add value to the property. So what we do is we use the first year's cash flow to renovate these apartment units. Add value, and once we are able to do that, we increase the income, increase the rent, and that way we can sell it for more. So typically, you can expect 2x equity multiple. What that means is if you invest 100,000, you can expect 200,000 to back at the end of 5 year hold cycle once we sell the building. You can also expect an 8% cash on cash return. So, 100,000, 8,000 per year of passive income. So you're looking at roughly 28% annual return on average for investing into a deal like this. Now, when you're talking about economic wise, how we're doing in the economy, well, just like you said, the interest rate has gone up. And so for us as syndicator, what we have to watch out for is, making sure that our debt coverage ratio is that we have plenty of supplemental reserves enough to be able to cover that, even if in an environment like this. But for the deals I've been in, our lead sponsors, we buy something called rate cap, meaning, once the interest rate rises to a certain point, it cannot go above that. So my deals is the interest rate is capped at 6.12%. So that's been helping a lot.
So you do use debt in your deals. It's not simply the equity from the syndicators going into the deal.
Oh, absolutely.
Yeah,
absolutely.
yeah.
So we're using 70% loan to value. And then the rest, the down payment, we raise the capital for equity.
I see. And you as a syndicator, you withhold, I suppose, some sort of a platform fee for the deal?
Yeah. So as a syndicator, the way how we make money is acquisition fee. So we get paid on looking for the deal, acquiring the deal. Once we close the deal, that's our acquisition fee. Typically, it ranges 1 to 3% of the total cost. We also make money on asset management fee, which is to manage the asset over time, the 5 years, construction, renovation, and so forth. And it depends on the syndicator, but sometimes we also charge a disposition fee, refinance fee, and a construction fee, and so forth. So that's basically how we make our money.
That's truly amazing. I mean, 600 units is a big number to own. Now, although you're covered to a certain extent for the risk of increasing interest rates, the economy may. I mean, I'm not going to go out there and say is going to, but it may completely tumble down. Would that have, or what would the impact of this be on the rent of or acquisition of these units that you're renting out?
So that's a great question. A lot of investors, when they invest into deals like this, they always have the similar questions, right? Typically, what we tell them is, if you look at back in 2008 during the subprime mortgage crash, right? There was about 4% single family resident that went into foreclosure, and then back in 2008, only 0.4% of multifamily went to foreclosure. So that tells you, it's very, very, very rare for multifamily to default. Why? Because chances are, if you're managing a 100+ unit apartment building, lenders are not going to want to take that. They don't want to own it. They don't know how to operate it. So they'll do whatever it takes to work with you, even if you're going through trouble paying down the debt. There's a lot of many ways to solve that problem as well. One is just, capital call. You tell the investors, hey, we got to put more money in because, we're just in this kind of environment. Two is, finding more people that will be able to lend you money from banks, from preferred equity. So there's solutions to problems. And, in real estate, I think it's one of the safest asset you can ever invest in, and you see people from ages 20 to 70 invest in real estate, and it tells you why, because it provides the most stable stability.
What is the biggest risk that you see in this business that could potentially happen? I don't want to look into doom and gloom, but I'm sure you do some risk management analysis. What is the biggest risk to this business?
The biggest risk I would probably have to say, it depends on the market, right? So the markets I invest in is in Florida, Orlando, and Jacksonville. So out there, the biggest risk, it would be hazardous, tornadoes or hurricanes, and those are the things that we have to watch out for. And that's why I ended up investing in Jacksonville, because in the past 20 years, nothing has happened out there. But Orlando, it gets tornadoes every once in a while. So that's where you basically just have to buy insurance, right? You got to make sure you're covered on that.
Oh, yeah. No problem. Go on.
Yeah. So I think that's one of the risks. But besides that, that's pretty much I can think of on top of my head, because it's, like I said, it's really difficult to go through a default with a multifamily. Another thing, what I would say is, upon taking over the project, right? When management, when we syndicate a deal and we take over an operation, typically you see a high turnover rates, right? Because once new management comes in, there's going to be some rent bumps, and then there's going to be change of operation, and you're going to see a lot of tenant move out, and that's when your occupancy rate comes down, and so that it takes time to stabilize the building. So typically, the first year you're not going to see any distribution because of that. And it's because we're trying to stabilize the property until it's at least 90% or more occupied.
Mm-hmm. So when it comes to syndication, is there a law that only allows certified investors, like with investment above 50,000 to invest, or could people invest with smaller amounts?
Yeah, so the minimum is 50,000. And that's another great question, because there's a difference between because you have to look at the deal, right? As a syndicator, when we syndicate a deal, we have to follow the guidelines of SEC, the securities laws, right? And in the securities laws, we have what is called a 506B and 506C. 506B, basically you can raise capital from pre-existing relationships that you had with friends, family, and these people, they can invest. It could be non-accredited investors that can invest in this deal, right? But 506C, you can advertise. 506B, you cannot advertise, okay, only with pre-existing relationship. 506C, you can advertise on social media, newsletters and stuff like that. But you can only take accredited investors. So accredited investors are investors who has net worth of $1 million, or they've made $200,000 in the past 2 years. So if they qualify any of that, then they qualify to be an accredited investor.
Mm-hmm. So you operate under the second section where you can advertise commercially?
No, I operate under 506B in my first two deals, because to start off, it's difficult to raise money from strangers. Only family and friends are going to invest in you. Not so much in your deal. They know you, so they'll invest in you. So that's usually how people start. But yeah, if you can jump to 506C, that's even better.
Mm-hmm. So how did you land on this business? Tell us a bit about yourself. What prompted you to do this, and what is required in terms of mindset, in terms of attitude to run such a business?
Yeah. So going back to what I said earlier, when I bought the 2-bedroom, 1-bathroom condo, my first real estate deal, I did everything from A to Z, right? I was the landlord. I found the tenant, run the background check, collect the rent, did the maintenance, did the whole 9 yard. And so, I've learned that that's not what I want to do for the rest of my life. And I wanted to automate it. I want to have this to be more passive. I don't want to be more active. So that's when I started thinking, like I got to have a list of vendors, I got to automate things. And when I was doing all of that, I started starting syndication as on the side. And I realized in syndication is essentially the same thing, but you're just doing it on a bigger scale, right? Because it requires partnership. And these, when we acquire these 100+ units apartment building, and in my first deal, there's a total of 6 general partners. So it is a team effort to be able to take down a building like this. And what the mindset it takes to get there is just plenty of education, right? Because for me, once I did everything on my own with that 2-bedroom, 1-bathroom, I realized there's so much I don't know. And that's when I started to read books, listen to podcasts, go on YouTube. And then eventually I also went out to network and found my business partner to be able to leverage his network and his track record of experience and knowledge to be able to syndicate a deal. So it does take some work, but anybody can do it if it just depends on how badly you want it, right? If you put yourself out there, go to networking events, build relationships with people, and join mastermind group, invest in yourself, you're going to see a return on investment on down the road.
Mm-hmm. So you basically started as a syndicator without being an accredited investor, correct? Because
Correct.
You started, correct. Okay. So how do you convince then people to trust you as they are accredited investors, but you yourself were not? How did you convince them to trust you?
Again, it's a team that you're involved in, right? Like if I'm on a team with someone who's got a track record of 30+ years of real estate syndication experience, they've syndicated a dozen deals, exited 2 deals, 3 deals, 5 deals, it doesn't matter. That right there is credibility, right? Mm-hmm. That credibility will go really far. And now I just have to find the right investor for the right investment.
I see. Okay. Anything else you would like to share that is important for people to know about this business?
I would say, if people want to get started with syndication, just don't give up. It's really hard. It's really hard to start this off the ground, especially when you don't have much capital, but always keep an open mind, right? I always tell people, like, there's 3 sides to the coin, right? There's the heads, the tails, and the edge. Try to stay on the edge, and I can give you an example on that too. Is I came from an Asian background, which in Asia we have the savers mentality. If we can't afford something, we're not going to borrow. Like, we're not going to borrow to buy something. Because cash in our mind, debt is slavery, cash is freedom. So that's the background I came from, right? When I acquired my first condo, I used all cash offer to buy that property. And that was one of the biggest mistake I made, because as a smart, savvy investor know that you got to use debt. You have to use debt to amplify your returns. Not only that, you also can get really great tax benefits, from using debt. And on top of that, you're using other people's money, the bank's money, to make more money for you, which is essentially, that's what syndication is as well, right? You raise capital and everyone makes money. And so and for me, it was really hard to change that mindset, right? Because I come from a savers mentality background. And until I finally I read the book, The Rich Dad Poor Dad by Robert Kiyosaki, he talks about why would you not use debt? And that's when I started to shift my mindset and started to explore syndication, right? If my mindset was stuck on just being a saver, then I would never ever do syndication. So that's what I mean by the heads, tails, and being on the edge. So now I get the best of both worlds.
Yeah. Thank you so much for this input. This was insightful. All right. So once again, the name of your website where people, accredited investors, can join your projects is formosainvesting.com. You have a free ebook, correct?
That is correct.
On all the mistakes you've made as a real estate investor.
Yeah. And how it was able to, overcoming those challenges, I was able to create a path for me to become a syndicator. So that's basically what the book is about. It's very short read. You can probably knock it off in 15 minutes. And they can also check me out on any of the social media links, Facebook, Instagram, LinkedIn at Formosa Investing.
Jim, I'm not going to let you go yet. I have a last question. What is the biggest success you consider you've had in your life, and what is the biggest blunder?
Well, the biggest success thus far, I would say it would be coming from my first job, working at LoopNet. Like I mentioned at the beginning of the show, it took me a year. I was jobless for a year. And when I found that job, I put my whole heart and effort and pretty much everything into that job. And I ended up winning a $50,000 bonus from that job because the CEO gave us like this massive incentive for the first, second, third, fourth place. Whoever can drive the most revenue for the company wins a prize, and I won $50K. So that's the biggest success. That was definitely something that I was pretty proud of myself because I put in 10 to 12 hours a day working, and the reason why I was hustling like that because I didn't want to go back to where I was jobless, and so I took that job really serious. The biggest blunder, I would probably have to say, my first deal. Just learning the fact that I put all my money, all my eggs in one basket, right? I put all cash offer, all my money is in that property, right? And now it's like, I'm liable for it. Like basically, I'm a big target, right? Because if I don't put that under LLC, someone can come after it, all my equity. On top of that, it was hard for me to pull that equity out to use that money to make more money. And that was a mistake I learned after closing that property. And like I said, back then I didn't know what I didn't know. And so after acquiring it, that's when I started to educate myself about it.
Wonderful. Well, congratulations on the success, and thank you for joining us today.
All right. Thanks for having me.
Thank you for listening to Grow and Learn. We hope that you found our podcast informative, engaging, and inspiring. Our mission is to help you keep growing and learning, and we hope that our conversations and insights have provided you with practical advice and useful perspectives. If you're looking for personalized support and guidance to help you achieve your personal or professional growth objectives, I offer a range of services to help. As a trusted management partner and mentor, I work with businesses in the process of transformation, looking for new streams of business, as well as M&A. With an extensive professional network of experts and mentors, I can bring on board the right person or team based on the specific needs of the company I'm working with. To learn more about the services I offer and how I can help you achieve your goals, visit my website at grownlearn.org. You can also reach out to me via email or social media. I'd love to hear from you. And if you enjoyed this episode of Grow and Learn, please subscribe to our podcast and leave us a review. Your feedback is important to us, and it helps us to continue to create content that is relevant and valuable to our listeners. Thanks again for listening, and we look forward to sharing more insights and perspectives with you in the future.